Welcome back. Our strong life insurance new business volumes have given Sanlam a boost during the half-year period. Total new business volumes grew 7%, which translated to a 40% jump in headline earnings per share to 473 cents. And joining me now is the company's finance director, Abigail Mukhuba. Thank you so much for your time, Abigail. Let's actually start off with that net result from financial services, which went to a record. Just lay the table for us on the drivers of that continued momentum.
Thanks. Good evening. The drivers behind our performance was actually broad-based across all our lines of business. This reporting period, I'm very pleased to report that whether it was life and health, whether it was credit and structuring investment business, as well as our general insurance business, we saw very strong turnarounds and strong performance across the group. A lot of the drivers being just a lot of effort that people have put in, our employees have put in to make sure that there was delivery. We've tried to focus, this year is actually the year of client centricity in terms of focusing on offering better service to our clients. And we're starting to see the fruits of the M&A activities that we've had over the past few years. We're starting to see the synergies of those also coming through and contributing to our bottom line performance. So it was really broad-based.
And of course, one of the key metrics and fruits over there that everybody likes to look at is new business volumes. You talk to us about where you are getting the most value there.
We've seen a significant increase in our single premium businesses, particularly in annuities and international sales. I think it also talks to the environment where, although bond yields are coming down, they're still significantly high. And you can see where in terms of comparison to, for example, interest rates with the banks starting to come down, you can see that the market is trying to redirect their savings to where they can get larger returns. But there's also a shift in terms of diversifying, let's say, retirement investments or retirement savings to also move towards offshore, whilst you also still have the local investments as well.
Yeah. Well, I mean, just, taking a look at the state of the consumer, just zoom into the ability to keep their policies paid. What's that looking like at this stage?
We're seeing, obviously, what we refer to it usually as persistency on our front. We're seeing that in the entry-level market, we're seeing strong turnaround in terms of people retaining and maintaining their policies, but times are still tough. There's still a lot of pressure on people's disposable income. As always, we try to engage proactively with clients so that we come to some sort of an arrangement before they actually lapse on their policies. We've also seen a lot of management actions and focus to try and make sure that we reduce what we refer to as policy churn. And we've seen in the short term that there's been a reduction. A lot of activities happened in the second quarter of the half that we're reporting, and we're seeing the results of that. In terms of the longer term, maybe let's say policies over 24 months, 18 to 24 months, we'll need a bit of runway to see if some of the management actions that have been put in place are going to impact on the longer term. In terms of let's say the more affluent clients, we're seeing that they're retaining their products, their policies, and the policy churn there is not as high or not worrying us as it does in the entry-level market.
All right. I quickly want to zoom into the short-term insurance business, Sanlam. I understand that the overall result was positive, but just looking at the negative impact of bad weather claims, how's that been?
It's actually been better than it had been last year. If you compare the impact of the negative weather claims, it's still large. I think I'm no geography expert, but we see that there are changes in weather patterns in the long run, and that has an impact. But with that, management has also made sure that they implement, let's say, stricter underwriting practices. One such practice, for example, is something that they refer as geocoding, and being able to identify the location of the properties if it's properties, that we would be insuring and making sure that then the policy that is offered to that client is appropriate for the environment where that property is actually situated. To such an extent that we've seen geocoding saving that business up to around 150 million in terms of losses that they could have incurred that they didn't incur. So yes, we've seen that there's been significant weather or extreme weather events that have impacted that business negatively, but it is well managed this time round and much less than it was over the comparative period in 2023.
We're talking about a negative impact. Also, we saw pressure there in Afrocentric in the period under review. Just talk to me about the weight that Sanlam is carrying because of it.
Luckily for us, Afrocentric is a smaller contributor currently to the business. It's a much smaller business compared to the rest of the Sanlam group. In fact, its contribution is less than 1% if we look at the business. However, from a strategic perspective, it is a key component of our business and what we aim to offer our clients in the future. But we're still comfortable that with the impairments, the management team that is in that organization has a good handle in terms of action that's required to turn that business around. But we're obviously disappointed by having an impairment, but it's not, in terms of the bigger weight or the weight that it contributes to the group, it's not that significant.
All right. Well, we do have to wrap up the conversation there. Abigail, thank you so much for giving us more insight on those numbers that came out from Sanlam. That was Sanlam's Group Finance Director, Abigail Mukhuba.